Inflation is cooling, so why are prices still rising? Have you ever heard a news report say inflation is cooling and then immediately wondered why your grocery bill still feels so high? You're not alone. Today, we're going to cover three things: why Federal Reserve policymakers don't always agree on interest rates, why cooling inflation doesn't mean prices are falling, and a simple summer project that can help preserve your family's legacy for generations. Let's get started. Recently, the Federal Reserve chose to leave interest rates unchanged. While many people focus on the decision itself, I think the more interesting story is the ongoing debate behind those decisions. Policymakers are constantly trying to balance competing economic priorities. On one hand, inflation has come down significantly from the elevated levels experienced in recent years. On the other hand, inflation remains above the Federal Reserve's long-term target. Some policymakers are concerned inflation pressures could persist longer than expected. Others believe current policies simply need more time to work through the economy. The key takeaway for investors and retirees isn't determining who's right. The takeaway is understanding that uncertainty is normal. Even experienced economists and policymakers don't always agree about what comes next. That's one reason retirement plans should be built to adapt to changing economic conditions rather than depend on a specific forecast being correct. One of the most common misunderstandings I hear involves inflation. When people hear inflation is falling, they often expect prices to fall as well. But those are two very different things. Here's a simple analogy. Think of inflation as the speedometer in your car. High inflation is driving 80 miles per hour. Cooling inflation, sometimes called disinflation, is slowing down to 35 miles per hour. Deflation is putting the car in reverse. When inflation falls from 8% to 3%, prices are still moving higher. They're simply moving higher at a slower rate. Let's use a simple example. Imagine a basket of household goods that once cost $100. During a period of elevated inflation, that basket rises to $120. If inflation then slows to 3%, the basket doesn't return to $100. Instead, it increases again to approximately $123. Prices continue moving upward. They're just doing it at a slower pace. This distinction matters because retirement can last 20, 30, or even more years. Over long periods, inflation can gradually reduce purchasing power, which is why many retirement plans account for rising costs over time, and probably should. Let's switch gears for a moment. Many families have boxes of old photos, VHS tapes, slides, and family albums stored in closets or basements. Those memories are valuable, but they're also vulnerable to time, damage, and deterioration. One rewarding summer project is digitizing your family's history. Whether you use a professional service or a smartphone scanning app, converting physical photos and videos into digital files can help preserve them for the future generations. You can even load those memories into a digital picture frame and share them with children and grandchildren. Financial assets are important, but many families discover that stories, memories, and family traditions become some of the most treasured parts of their legacy. Economic headlines will always come and go. Understanding the difference between slowing inflation and falling prices can help you make better sense of what you're seeing in the news. And if you're looking for meaningful project outside of investing, consider preserving some of your family's history while you have the opportunity. Thanks for watching, and I'll see you in the next video. Disclosure: this content is for informational and educational purposes only and should not be considered investment, tax, legal, or financial advice. Investing involves risk, including the possible loss of principal. Opinions expressed are subject to change and are not recommendations to buy or sell any security. Thanks and have a great day. Bye.